Good afternoon, ladies and gentlemen. A very warm welcome to another virtual seminar organized by the Seminars and Conference Committee and the Taxation Committee of the Institute of Certified Management Accountants of Sri Lanka, the national professional management accounting body in Sri Lanka, incorporated by an Act of Parliament. CMA has always played a lead role in this digital environment to upgrade the knowledge of its members by organizing continuing professional development programs for its members and students. The presentation on the Inland Revenue Amendments Act 2022 will be conducted by a panel of experts in taxation. The presentation on the
Rajendra, just check your sound. Sound is very faint. Your sound is faint. Okay, right. Good. Yeah, okay.
Yeah, thank you. The presentation on the Inland Revenue Amendments Act 2022 will be conducted by a panel of experts in the taxation. The presentation on the individual taxation and VAT will be delivered by Mr. Atula Ranavira, Managing Partner, Ranavira Associates. And on company taxation will be delivered by Mr. N. Sulaiman, Partner, Tax Ernst & Young. This will be followed with brief presentation and a question and answer session with Mr. N.R. Gajendran, Senior Partner, Gashman Company, Mr. S. Pereira, Principal Tax and Regulatory at KPMG, Mr. K. Sivanesan, Tax Consultant and Senior Partner at Amrsagar and Company, Dr. D.K. Rajabaksha, Group Chairman of DSI, Dr. Mahesh, CEO of Global Rubber Industries, and Mr. M. Jayasekara, Managing Director of Lanka Tiles PLC and Chairman CMA SB, which will be moderated by Mr. N. Sulaiman, Partner, Tax Ernst & Young. To commence the program, I have pleasure in inviting Professor Lakshman R. Vattavala, Founder President, CMA Sri Lanka, to deliver the welcome address and introduction to today's topic. Professor Lakshman R. Vattavala has led the Sri Lankan accounting profession, have been the President of Chartered Accountant, President, South Asian Federation of Accountants, and founder signatory to the formation of SAFA, founder of WAT Sri Lanka and founder of CMA Sri Lanka. He is currently served as a SAFA board member and chairman of SAFA International Relations Committee. Professor Lakshman R. Vattavala, I am honored to invite you to deliver the welcome address. Over to you, sir.
Thank you very much, Mr. Gajendra, who is our chairman of the Taxation Committee. And we have, I think, one of the most important and the most popular seminars or webinars have been on taxation. Even for the current seminar, we have had almost 700 registrations, but the attendance definitely, since it is free, people register, but maybe some of them come late, some of them may not even attend. But anyway, 50% of the people will attend. So we are, as I said, we are conducting these free of charge. So that means I must thank all our presenters and also the panelists for making available their valuable time to give their knowledge and share their experiences with all of those who are present here. So today's topic is on the Inland Revenue Amendment Act, which was approved by the Parliament on the 9th of December, and of course the relating also to the Inland Revenue, the VAT Amendment Act of 2022. Most of you are aware of what is there in the Inland Revenue Act and the VAT Act, but I'm sure that you would like to refresh your memories, because once it is approved by Parliament, there is a duty upon everyone to make the payments, and hence that's something that we all need to adhere to. So I'm extremely thankful to our presenters, both Mr. Atula Ranavira and also Mr. Nitsa Sulaiman, for the tremendous amount of presentation they have done, and they'll be sharing their knowledge and experience with you. Then we also have commentaries that will be given by our panelists who are present here. They are Also, those with a great deal of experience. So I'm sure that they will be able to tell you the pros and cons and how it is going to affect, because this is the bigger letters are impact on individuals, professionals, corporates, and society, because some of the demonstrations that you see today are relating to the new Inland Revenue Income Tax Act. So from the professional point of view, what we can see is that we would like to advise, because as a professional accounting body, what I can say is that we can give you the knowledge in order that you can acquire better skills, more skills, in order that you can get a higher salary. Because now you know that the slabs have been brought down, the tax rates have gone up. So then you have to earn a higher salary in order that you can enjoy the same benefits that are there. So we as a professional management accounting body, and also as a Sri Lankan body, we are giving the education at an affordable rate, which means that those who are able to maybe obtain this qualification, no strict rules and regulations. If you are working now, you will be able to sit for the exam. And but we now find that those with the intermediate qualification, our middle level qualification, who get the certificate in accounting and business management, are now going overseas. A lot of them to the Middle Eastern countries. And there is an advantage, because once they go there, they are able to not only earn a salary, but today we are with the use of the digital technology, they are able to follow the programs from there. And also our examinations are computerized using digital technology. They are able to sit the exams from there. So now this is another new method that is available to our youngsters who can get through their middle level, go overseas, earn a good salary, and then do the exam from there. So CMA Sri Lanka is providing that to our youth who are today running away, because a lot of the companies are having a major problem because the skilled people are leaving the shows and going. So we as professionals will be able to give this knowledge, the skills to all these youth who want to learn them. So if you are very interested, if you are able to very keen and study, then I'm sure that new avenues are available for you. So opportunities are plenty, so don't miss them, make use of it. So once again, I must thank all our panelists or all our speakers for the great interest they have shown, and also for all the participants, because we see that this is a seminar that will benefit them. So they will definitely be able to not only to listen to, but plan their future and how they are going to do it. So thank you, and I wish you all the very best.
Thank you very much, sir. Next on agenda is the presentation on the Inland Revenue Act 2022 provisions related to individual taxation and VAT by Mr. Ranavira, Managing Partner, Ranavira Associates. Over to you, sir.
Good afternoon, everybody. Today, within half an hour's time, I will cover up the area assigned to me. That is the latest tax amendments, that is the Inland Revenue Act. Other than the corporate tax, the balance part I will cover, the individuals and the withholding tax part. Then I will just cover the VAT part in very brief. Right. To support my presentation, I will open a PowerPoint presentation. Yeah. Today, we are to discuss the insights of Inland Revenue Act Amendment Act and the value-added tax amendments. Now, these two amendments are passed in the Parliament on 9th of this month, And 14th of this month, the speaker has signed the final acts. Still, the final printed versions are not available. But as a result, I couldn't enter the act number, amendment act numbers here, but we will discuss the subject matter. Now, first of all, we'll see, as I mentioned, the Inland Revenue Amendment Act number 11 of 2022, the bill of 11th October 2022, and the value-added tax bill of 27 September 2022 are passed in the parliament on 9th of December and approved by the speaker on 14th. Why we wanted this type of amendment? Now, there are the three main reasons. One is that government is, as a country, we are suffering huge deficit of foreign exchange income, huge deficit of foreign exchange. Then the government is suffering heavily on little income and more expenditure. The income is not sufficient to meet the expenses. Then to sort out these main issues, what's most important is to increase the gross domestic production. We can borrow some money and spend for a temporary time period, but in long run, the only solution is the increase of gross domestic production, right? Only thing we have to see, we have to wait and see whether these new amendments proposed itself will help to sort out these issues. Now, in my presentation, I have included the individual income tax. Then the corporate tax part is also there, but I'm not going to cover these few slides. Then I will cover the withholding tax and VAT. Right. Now, first of all, we'll see the changes which relate to individuals. The changes which relate to individuals. The changes which relate to individuals are mainly effective from 1st January 2023. As you all know, the corporate bodies changes are from 1st October 2022, whereas the changes which relate to individuals, most of the changes which relate to individuals are effective from 1st January 2023. Now we will see what are the main changes. I know the majority of you all know these changes, but we will refresh our knowledge. Then the personal tax-free allowance reduced from 3 million to 1.2 million. 3 million to 1.2 million per annum. Then the tax slabs. Earlier we had 3 million slabs. We had 3 million slabs. First 3 million 6%, next 3 million 12%, balance at 18%. Now these slabs, they have reduced from 3 million to 500,000. Then the VAT rates, the rate changes. As I mentioned earlier, we had 6%, 12% and maximum 18%. Now, according to the new amendment, the rates are 6%, 12%, 18%, 24%, 30%. The maximum is 36. The maximum rate has gone up from 18 to 36. Then another main important thing is this expenditure relief. Earlier we had expenditure relief of 1.2 million per annum. That is totally removed. Then certain income tax exemptions are also removed. Some of these exemptions which I have listed here are applicable for corporate bodies as well, but as it is applicable for individuals also, I have listed here. Now, the certain income tax exemptions, the following income tax expenses are abolished. They are with effect from 1st April 2023, not 1st January, it is from 1st April 2023. Right. What are these exemptions? The gold, gem and jewelry export business. They are enjoying tax exemption at present. that tax exemption will be abolished with effect from 1st April 2023. Then IT-enabled services to local market, IT and enabled services to local market, the exemption will be abolished from 1st April 2023, but the export, the tax exemption will continue under the service export category. They can continue to enjoy the service exemption category. That is under third schedule item, item U, you can enjoy that. Then recycling of construction material, construction waste materials, if you recycle that industry, they were enjoying tax holiday that is abolished with effect from 1st January 23. Then a business commenced by an individual after vocational education, they were enjoying a tax holiday that is abolished. Then boat and ship manufacturing by local resident, that is the resident person, that exemption is abolishing with effect from 1st April 2023. Then renewable energy projects above 100 megawatts is removed, exemption is removed with effect from 1st April 2023. Then communication tower construction, equipping and related services, businesses are also exemption will be abolished with effect from 1st April 23. Then letting out of bonded warehouses and related offshore businesses, that exemption also will be abolished from 1st April 2023. Then in addition to this exemption, abolition of exemptions, they have introduced certain other things. As it is connected with individuals also, I have listed those things also here. Introduction of 15% mandatory withholding tax on dividend. When any person, any shareholder receive a dividend, it is now, it will be subject to 15% withholding tax with effect from 1st January 23. Because you can't introduce a withholding tax, you can't backdate a withholding tax. Therefore, they have given the date as 1st January 2023. Then the company, when they declare, they deduct 15%. Then on the share, and that is the final withholding tax. As a result, the recipient need not to pay any further tax thereon. Then 5% mandatory withholding tax on interest. When any person receives interest income, it will be subject to 5% withholding tax. That is not a final tax. Therefore, you have to include this income into the taxable income, calculate the tax. Once you calculate the tax, you can get a credit for that 5% what you have paid. Then abolition of maximum income tax limit of 14% on gem and jewelry supply and renewable electricity to the local market. Now, when gem and jewelry is supplying in the local market, at present, there's a maximum tax rate of 14% for individuals. That is abolition with effect from 1st January 23. Like suppose you fix solar panels on your roof and generate electricity and supply to the Ceylon Electricity Board, then that income also at present enjoying 14% tax, but in future, it will be with effect from January 1st, it will be liable to tax at the normal rates. Then no change on following existing taxes. What are those things? The betting and gaming, liquor, tobacco businesses. There's a 40% tax. There are the tobacco and liquor and tobacco businesses, either you import and sell in, or you manufacture and sell in only, then 40%. Then income tax on investment capital gains, that 10% rate on individuals, there's no change. That continues. Then now most of these changes are with effect from 1st January 23. As a result, when we take the year of assessment 22-23, first 9 months, we have to apply the old tax rates. And for the last 3 months, we have to apply the amended tax rates. Amended basis we have to apply. They are on proportionate basis, we can take the income. Then no changes are incorporated on the following income tax exemptions. Certain income tax exemptions are continuing. For better knowledge, we will see what are those things. Compensation and gratuity, the capital part, income in relation to personal injuries or death, that is continued to be exempted. Then government pension, then the retirement benefit receiving from income portion of the pension fund, the interest on or after 1st April 1987 of ETF, then Commissioner General approved or regulated provident fund. In that case, both capital plus interest is exempted. Then government employees road vehicle permit continued to be exempted. Then senior citizens life annuities exceeding 10 years. If you have a life annuity, senior citizens above 60 years age, then they can enjoy this 10-year tax holiday on that. If it is more than 10 years, the ultimate proceed what you are getting is tax exempted. Then sale proceed of gems, where you have paid 2.5% withholding tax to the National Gem and Jewelry Authority, there won't be any further tax on that sale, that business. Then services rendered in or outside to be utilized outside Sri Lanka, and the proceeds are remitted to Sri Lanka through a bank, that their tax exemption continued. Under this, IT services also can enjoy this tax holiday as far as the IT is supplying to overseas market. Then any foreign income earned or derived in foreign currency and bring to Sri Lanka through a bank. Actually, this section is mainly for money laundering supportive section, because what it says is earlier one services, this says any foreign income. You can bring any foreign income to Sri Lanka through a bank, then there won't be any tax in Sri Lanka. Interest income on foreign currency deposits continue to be exempted. Now we will see how to apply these taxes. 1st January 2020 up to 31st December 22. 31st December 2022, these are the rates what we have. We have personal tax-free allowance of 3 million a year, then expenditure relief of 1.2 million a year. Then out of the taxable income, first 3 million 6%, next 3 million 12%, balance anything above 6 million taxable income at 18%. At 6 million taxable income level, we are paying 540,000 tax. Under the present system, which is effective from 1st January 23, first, the personal allowance only 1.2 million, no expenditure allowance. Then first 500,000 of taxable income 6%, next 500,000 12%, likewise it will go up to 30%. Then anything above 2.5 million taxable income, anything above 2.5 million taxable income to be taxed at 36%. Now we'll see the effect of this increase, the effect. Now I have prepared this table after considering, assuming that we were enjoying 1.2 million per expenditure relief. If we were enjoying, anybody who has got the proper advice may have enjoyed this 1.2 million expenditure relief. On that situation, now what will be the tax? If your monthly income 350,000 or annual income 4.2 million, under the old law, no tax at all. Under the new amendment, 630,000 to be paid per annum. That means monthly tax goes up by 52,500. Then at 400,000 level, earlier we were paying 36,000 a year. Now we have to pay 846,000 a year. That means monthly our tax cost will go up by 67,500. After this session, I'll be sharing this document. Therefore, I'm not going to read everything. Now, if we'll take the 600,000 rupee monthly income level, that is 7.2 million annual income level. At present, we are paying 180,000. In future, we have to pay 1,710,000. That means per month we have to, our tax increased by 127,500. Now, this is the issue among most of the taxpayers, how to survive, because your take-home salary or your expenditure ability come down by 127,500 at this level. How to survive? This is the issue. Now we'll see for the year of assessment 22-23, as I mentioned, we have to apply first 9 months old rates, balance 3 months new rates. This is a small computation how to apply. In that case, first 9 months, you can claim the tax-free allowance 2,250,000. That means 3 million, 3/4 of 3 million. Then expenditure relief, you can claim only 900,000 because for 9 months. Then slabs will be not 3 million for 9 months, so therefore 2,250,000 slabs. Then under the last 3 months period, personal allowance of 1.2 million divided by 1/4 of that, 300,000. Then each slab 500,000, 3/4 of 1/4 of 500,000, only 125,000 each. Then these are the taxes what we have to pay. Now, these few slides, my friend, will cover up. Therefore, I'll be moving to the withholding tax part. Right? I'll be moving to withholding tax part. Before moving to the withholding tax part, application of tax rate for 22-23, how to apportion. That is given in section 41 of this new amendment act. In the new amendment act, section 41 talk about how to apportion the 22-23 taxable income. Now, if we'll take, as per this law, if in the case of an individual, we have to take first 9 months separately and balance 3 months separately. In the case of non-individual, that is the corporate bodies, we have to take first 6 months separately and balance 6 months separately. Now, what it says is the apportion basis, as per the law, apportion basis in the case of individual, as it is 9 months, we have to take 75% for the first 9 months, 25% for the second 3 months. Likewise, in the case of corporate body, 50-50 basis. Now, in section 41, it says, in arriving at the taxable income, the person may use, what it says is may use. If you want, if you have a better application, you can apply the better method. That's okay. What it says, may use pro rata basis for the purpose of calculation of the business income. Now they are covering here only the business income. This basis they have given only for business income. Right. Now, these are corporate related things. I'm not going to cover. I'll move to withholding taxes. Withholding tax, all the withholding tax new changes are effective from 1st January 2023 because they can't backdate it. Right. In the case of remuneration, APIT will be mandatory with effect from 1st January 23. At present, the APIT is not mandatory. In future, it is mandatory. If any employee is getting more than 100,000 rupees per month, more than 100,000 rupees per month, the APIT is mandatory. Then dividend, 15% is mandatory as a final tax on any person. Then interest, 5% with the mandatory withholding tax is there, but it is not a final tax. Therefore, you get the credit for tax. Then on other payments, there's a withholding tax of 14%. Then on rent, if the rent is 100,000 per month or more, even 100,000 rupees you have to deduct as per the law. If it is 99,999, no deduction. If it is 100,000 or anything more than 100,000, you have to deduct 10% withholding tax on the total. Then non-resident service fee, insurance premium, there's a withholding tax of 14% on payment. Withholding tax of 14% on the payment. Then other service fees, if exceeding, in that case, if exceeding, not equal, if exceeding 100,000 rupees per month to residents, there's a withholding tax. They have introduced a mandatory withholding tax of 5% on the total payment. Then to manage the time, I'll directly enter into the value-added tax small adjustments. Now, in the case of value-added tax, there are three main changes. One is VAT rate increase. Now, rate, of course, as per the value-added tax, the Minister of Finance can increase the change the value-added tax rates by way of a gazette. Accordingly, he once increased the value-added tax VAT on 1st June 2022 from 8% to 12%. Again, on 1st September 2022, increase from 12% to 15%. From 12% to 15%. That is by way of gazettes. Then VAT registration threshold reduction. That the minister can't do that. Therefore, it now went through as a bill through the parliament. On 14, they approved, the 9th, they approved it. Right. There, the VAT threshold of 300 million per annum and 75 million per quarter is reduced to 80 million per annum, 80 million per annum, or 20 million per quarter. 80 million per annum or 20 million per quarter. Now for this, I have included, because by the time I prepared it, it was not signed by the speaker. Therefore, I have included need to wait the certification of the act by the speaker to decide the effective date for registration. I have included, but I heard that the speaker has signed it on 14th, right? Then a few VAT exemptions are removed with effect from 1st January 2022. Out of these things, the most important change is with relate to the condominium residential apartments. Now, condominium residential apartments are exempted from VAT, but with effect from 1st January 2023, condominium residential apartments will be liable to VAT. Right. Then any sale or effective sales and purchase agreement signed prior to 1st January 2023 will not be liable to value-added tax. Right. Then next, the 0% VAT rate, we had a 0% VAT rate on leisure industry. That VAT the rate of 0% is changed with effect from 1st June 2022. This 0% changed to 12%. Then again, from 1st September 2022, it went up to 15%. Now, this 0% was enjoined by leisure industry, that is the hotels, guest houses, restaurant, and other similar businesses which are approved by Tourism Development Authority. They were enjoying this. Now they have removed that, and now they have to pay 15% VAT. Earlier there was a requirement of 60% local value addition. Then only they were enjoying this 0% rate. I think that's all what I have to mention, what I have to cover, right? What I have to cover. Now, in addition to that, now day before yesterday, the Inland Revenue Department, they have published this type of a notice. This is prior to Speaker signing the amendment acts. They have basically what they have mentioned is that the registration threshold, though the registration threshold is reduced, The effective date for a real action, you better wait until the speaker signs the act. That is what it says in this notice. Accordingly, now speaker has already signed. Then I think I managed to finish off within about 26 minutes or 27 minutes. Thank you. If there are any questions, we will discuss those. We will cover up those things at the panel discussion and question and answer session. Thank you very much.
Thank you very much, Mr. Ranavira. Next on agenda is the presentation on the Inland Revenue Act 2022 provisions related to the company taxation, which will be delivered by Mr. Sulaiman. Over to you, Mr. Sulaiman.
Thank you, Mr. Gajendran. Give me a minute till I share my screen. Right. Good afternoon, ladies and gentlemen. I hope I can be heard and the slides can be seen. So what I'll be taking you through today is the changes to corporate income tax as a result of the passing of the law, which happened recently. So effectively, there is no significant change, but we just run through what are the changes that are going to be applicable in terms of industry-wise rates. So that will probably focus the discussion on different industries and how they get impacted and from when, as well as the effects to business profit calculation, as well as in terms of investment income that may affect businesses or corporates. So the effective dates that we need to be mindful of when this law, which does take into or bring into effect certain provisions, these are the significant dates. We have the provisions, the corporate provisions coming into effect from October 1st, 2022, and that stays as it is, that hasn't changed. We have most individual and withholding tax rates coming into effect from January 1st, 2023. We have exemptions phasing out, where an exemption is being taken out. Most of those have come into effect from April 1st, 2023, and not halfway in the year like the concessionary rates. And then we have certain certain provisions being adjusted retrospectively, even from the beginning, all the way up to April 1st, 2018, when this new law came into effect. So you need to be mindful of those and see what sort of retrospective effect these are going to have on certain transactions and positions you may have taken in the past. So corporate tax, we'll do a quick sector analysis, run through it. Withholding tax I won't be covering because Mr. Atula Ranavira covered that. We'll just touch on investment income and then move into the panel discussion. So as you know, this one of the significant sectors that have been affected is the export sector, which for the longest time had a concessionary rate. It started at 12, I think, and then moved to 14. It was 15 before that, if I recall. So that, with retrospective effect, from October 1st, the profits earned from that point onwards is going to be taxed at a 30, more than double of the rate, which is going to have a significant impact, especially with the currency depreciation as well. Is likely to have a significant impact in this running year. Of course, if most exporters do have BOI agreements, and it is likely that those BOI agreements may have some sort of concessionary clauses in it, which has to be taken case by case, but something to look out for, especially for exporters. Similarly, suppliers to exporters of both goods and services also will be moving up to 30% with retrospective effect. There again, any BOI agreement that is in force needs to be analyzed to see if a better rate can be taken. This is services. Then on the suppliers to exporters, the suppliers to exporters, to get the reduced rate of 14%, one of the conditions was payment in foreign currency should be made by the exporter to that supplier, right? Now, because of the mandatory conversion rule, that was not possible. So this will apply, of course, to the first 6 months where the 14% did apply. And this amendment provides for a relaxation in that payment of foreign currency, and says because of the mandatory rule, exporters couldn't pay. Therefore, a confirmation of these foreign currency receipts, if provided by the exporter, should be sufficient to take that 6 months. So that is something you need to obtain if you are supplying to an exporter. You need to obtain that from an exporter in order to take the 14% rate that's applicable at least in the first 6 months. Then again, manufacturers had a low rate of 18 that will also move up to 30%, which is again a significant increase. Of course, one of the few industries that have been spared is agro farming, that is at the primary level where you actually grow any agricultural product, whether it be on land or whether it be animal husbandry. That will continue for the 5 years from, it was given in 2019 till 23-24. That 5 years will continue. So agro farming has not been amended, and that is something we need to take note of. Oops. Did the slides just go? Let me put it again, just 1 minute. Right. Right, my slides can be seen. It's agro farming, right? You can see agro farming, right?
Yeah, we can see.
Right. So agro farming will continue. The existing exemption to the farming element on agro processing will also continue. So there is in the law, if you are doing agro processing and you are doing your own agro farming for the processing business, then that internal supply of agro farm products to the agro processor had an exemption, a deemed exemption in the law. That too will continue. That also hasn't been affected by these amendments. Agro processing, of course, will go up from 14% to 30%, again retrospectively from October 1st. There is also relief of 25% of the tax payable if you are using agro farm products in your processing or manufacturing. That concession has been reduced from 5 years to 2 years. So that will end from 22-23. So it's very important if you're in agriculture or agro farming or agro processing that you look at these rates carefully before applying it. Then another industry that was significantly having concessions for several years, the gem and jewelry industry, was exempt. That exemption is to be removed from April 1st, 2023. So it's running the full year of assessment. And then from 0, it will go to 30% from April 1st, 2023. Another sector that has been spared is the services for foreign currency, which includes IT for foreign currency and BPO for foreign currency. This sector, if the foreign currency is remitted to Sri Lanka through a bank, that concession will continue, the exemption will continue. That has not been affected. However, IT and enable services, which was exempt, will for the local market, it was exempt. That will go up from 0 to 30% from April 1st, 2023. So that also the full year is allowed to run, like in the case of gem and jewelry. And from April 1st, from the year of assessment 23-24, 30% is going to be imposed. This was covered, but I think from an IT BPO perspective, if there are other than employees and you have freelancers who are working, now this 5% on specified fees will apply. So the company will have to now start withholding from freelance consultants for payments over 100,000 a month, which is not a final payment in the hands of the employer. So there, the significance of the company's requirement to withhold is deductibility will depend on the fact that whether if something requires a withholding, it needs to be withheld. Otherwise, it can be added back for tax, and that's the significance of having a solid withholding control process in your payments. Shipping, logistics, and warehouse. All of these entrepreneur trade, front-end services, offshore, headquarter, transshipment, freight forwarding, all at 14, all going to hit 30% from October 1st. The final withholding of 2% on non-resident transportation will continue, and the exemption on dividends distributed by hub service companies with the BOI agreement will also continue. Tourism also to go up from 14 to 30, again from October 1st, just when the tourism industry is picking up, or at least we see it picking up. So whether the government will come up with non-fiscal benefits for this industry, which has been plagued in the last 3 years with issues, and with significant payments to the banks also due from this segment, whether there will be some other concession, given that the rate is more than doubling from October 1st going back. Tourism related services as well, things like restaurants, anything registered with the tourist board also to go up to 30%. Similarly, education, other than government assisted private schools also to go up. And in this case, payments to freelance lecturers and teachers, also the 5% withholding to come in. Healthcare also to go up from 14 to 30% from October 1st. And then the famous deduction from doctors will now come back in, where hospitals will have to deduct the 5% on payments, which is not a final tax. Then small and medium enterprises, again from October 1st, 14 to 30%, which is significant impact to those just trying to come up. When the bigger companies had the increase of only 6% from 24 to 30, whereas SMEs are having a significant hit from 14 to 30, is something that SMEs have to now be more agile to see how to best manage their affairs given this increase. Because you don't have a slab, right? In corporates, you don't have a slab. So whether you make 100,000 or 1 million or 10,000, still you have to pay the 30%. Of course, profits, but still 1/3 gets wiped out. Then the impact on listed entities. This was talked about a lot in most of the discussions we had, where if you, the concession that was given was if you listed between January 1st, during 2021, basically, you were given a 50% reduction in the first year, that is 21-22, and 14% for 3 years thereafter. So if you look at this table, the current position and the proposed, you were given a 50% reduction in the first year, and then 14 right throughout for 3 years. However, now with this amendment coming into effect, the 50% reduction in the first year is still there, but 14 for the next 3 years now moves to 30, right? So more than doubling, and this has a significant impact, which I've just worked out here, almost an 89%. You take the cumulative tax over 3 years, it is almost an 89% increase as a result of the removing of this. So significant impact to those companies that took this concession at that time. Right, so those are basically the changes to rates, removal of exemptions on the high level, how it's going to impact corporates. The computation of taxable income also has seen a change. What is said is that you have to take 6 months as the first period and the next 6 months as the second period, right? And the rates under the old law will apply to the first 6 months, and the rates as per the new law will apply in the second 6 months. However, for business profits, they provide, you'll have to see whether it's a concession to you or not, a straight line basis, right? A pro rata basis to split the profits between the two periods as half, or 50% of the profits to the first 6 months and 50% of the profits to the second 6 months. So like explained by Mr. Ranavira, the word used is may. You may take the prorated basis or you may not, right? So I think the way it appears is that you can take a position that is more favorable to you. But this apportionment can only be taken for business income, which means that investment income or any other income that you may have would not have that opportunity of splitting it in half or taking a prorated basis. You might have to go on the actual basis. And when you say actual basis, you will have to follow the accrual basis of accounting for anything else, right? So that wasn't there in the initial bill. Initial bill had you can split it, you can split any income or taxable income, whereas in this amendment, which has come through the committee stage, it is limiting it only to business income for both individuals and corporates. So that's something to look out for when the calculation is actually done. Then withholding, I will skip through, and then we move to impact on investments that corporates may have. So investment in shares, the exemption continues on listed shares. That is not changed. Also gains from the realization of shares or the sale of shares of a non-resident company by any person with substantial participation. That is, if you have more than 10% and you sell, those profits are also, those gains, capital gains are exempt. And the significant change to capital gains is the increase of the rate from 10% to 30% on investment assets, right? So here you will still continue to get the 30th September market value. That has not been amended for an investment asset. It is only the rate that has gone up from 10% to 30%. Right. So on dividend, there is still ambiguity as to how it applies, and I think we'll put it to the panel as well. But one thing is said in the bill. Then after committee stage, there was no change to it, so that has now become law. Whereas the budget 2023 gave some clarifications on certain things. So what we understand from discussing with the Ministry of Finance is that these amendments in the budget were not able to be brought into this act through the committee stage because it was challenged, and I think only what the Supreme Court, what agreed at the Supreme Court, came into committee stage. So what is mentioned in the budget will probably come in the 2023 amendment with a retrospective effect is what we understand. So this is what it says. So we have the two columns as per amendment bill, or now is an act, and as per the budget 2023. So dividends from a resident company, there is no AIT, and to be taxed at 30% because the 15% concessionary rate was removed, right, from October 1st. However, and that is what is got passed, right? But the budget provides that it should be taxed only at 15%. So this is not law. So we should, I think, expect notice at least from the department to clarify this. Then dividend distributed out of dividend received what the law now says is after the passing of this, that is exempt only if the dividend is subject to AIT at 15%, right? However, there was no AIT in the last 2 years, right? So in which case, any redistribution of dividend received would be liable. However, the budget says that it will be exempt if tax has been paid at 15%, right? So that is in this interim period, right? From October 1st, the coming of the bill, to the passing of the law. It's interim period. The transition is what the budget tries to give clarity on. Then dividend derived by a non-resident person, as per the act that is now passed, the Amendment Act, it's not tax exempt. However, the budget says it is exempt until the passing of this law, and that is what we will probably need clarity on. So there's a lot of ambiguity if a dividend is going to be distributed from October 1st to the passing of this law until January 1st, because January 1st is the date in which the AIT comes into effect, right? The advance income tax on dividends comes into effect. So until January 1st, even though this law is passed now, there is no requirement for AIT. So I think quite ambiguous, complicated situation, which I think the ministry and the department needs to quickly put a notice out on. Right, so dividends from a resident company, AIT of 50% will apply, which will be a final tax payment that is from 23, from next, effective from, sorry about that one. Yeah, so from January 1st, 2023, this is what will apply. So the AIT of 15% will apply, and that will be a final tax for dividend. Dividend distributed or dividend received, it will be exempt if it is subject to AIT at 15%, and dividend distributed to non-resident will not be exempt from January 1st. It will be liable at 15%, which will also be a final tax. So from January 1st, it's rather clear, but this interim period, October to January 1st, there appears to be a ambiguity between the law and the budget. So dividends that will continue to be exempt is dividend received from a non-resident company, again with substantial participation. If you have over 10% and the dividend is received from outside Sri Lanka, that is exempt, as well as those involved in hub services, those dividends will continue to be exempt. Treasury bills and bonds and other government securities, interest on the community-based banks will continue to be exempt. AIT will not be deducted. There's no withholding on interest on treasury bills and bonds, right? So that is going to continue. And the recipient company of that interest will have to pay 30% tax in the case of a company. Again, government securities, there are these exemptions will still continue. Interest and discount on to sovereign bonds, interest discount to any person on foreign currency sovereign bonds and SLDBs, and the gains from the realization to any licensed commercial bank where the investment exceeds 100 million. Those exemptions are still in force. Interest exemptions, again, FCBU and special deposit accounts, the interest will be exempt. Interest on non-resident loans, so dividend exemption was taken out, but the interest exemption on foreign loans is still there, right? So now there is a discrepancy between funding with equity and funding with loan capital. So that is something to also look out for. And then interest on MNCs from a foreign currency account to cover import expenditure, that interest also is exempt. So whatever is not exempt, banks will now have to deduct this 5%, which is not a final tax. So you need to make sure the withholding tax credit certificates are available for claiming. Then REITs, all the concessions under REITs have been removed. On property investments, again, the capital gains tax has gone up from 10 to 30, regardless of whether it's business or investment. Now it's the same rate. Interest will have the 10% coming in on any amount more than 100% in the case of a resident. In the case of a non-resident, it will be 14%, subject to the double tax treaty. Yeah, so that's about the impacts to corporate. With that, I will conclude the presentation and we can move to the next segment.
Thank you, Mr. Sulaiman. Next on agenda is the panel discussion and a question and answer session, which will be moderated by Mr. Sulaiman. Joining us as panelists are Mr. Gajendran, Mr. Pereira, Mr. Sivanesan, Dr. Rajabaksha, Dr. Magesa, and Mr. Jayasekara. We invite you to send your questions using the question and answer session. Over to you, Mr. Sulaiman.
Thank you, Mr. Gajendran. So before we move to the questions that we hope our sort of participants will put in the chat box, right, or the Q&A. It will be, I think,
Actually,
on the Q&A. Yeah. So
I
please
think we
put your
have,
questions.
Nista, we are giving 5 minutes commentary
Yes.
to all. Yeah.
We'll start that. Yes. So I request everyone to put your questions in the Q&A, which we can take up after we have the initial comments. The panelists, I would like to can I request you to put your cameras on, and I think we can then you can give your initial 5 minutes comments on the amended law and what your initial thoughts and significant points are. Can we start with Dr. Kulatunga Rajapaksa?
Actually, I think I had sent a list, Mr. Gajendran first, then Suresh,
Okay, sorry. Okay.
so that the tax ones will come first, Sivanesan, then Dr. Rajapaksa, Dr. Mahesa, and Mahendra Jayasekara.
Right. So if you all have that list, we can put it.
I think Mr. Gajendran is first here.
Mr. Gajendran, you can start.
Yeah, thank you. This basically, if you see the theme heading for the session is impact on individuals, businesses, professionals, and the society. Because of the introduction of the Inland Revenue Act, the new act, and also maybe with the introduction of the VAT. Basically, paying taxes is generally unpleasant. People consider it as unpleasant. Why is it? Because this is their hard-earned income, or what have they earned in the past. They have to pay tax on the income. Also, if you are lucky, if you have got some wealth from your parents, even on that you have to pay income. But with civilization and the democratic process, we have to find the money. The government has to find the money for the people. The state is owned by the people to look after some of their basic necessities by education, healthcare, housing, and things like that. Then there is a justification. You impose taxes by legislation. Without legislation, if you ask people to pay, you can't. If that means it will come to sort of a highway robbery. Now, once, so there is a justification to impose tax, even if it is unpleasant. But if the tax becomes unbearable, that is the point, what is happening now. As Lakshman said also, all the protests now are on the taxes. Most of the protests you see are on the taxes because it is becoming unbearable. Why is it becoming unbearable? Taxes are it's being double. Apart from it being double, first, if I can say, our purchasing power has depleted at least 50 to 75%. The rupee's power, over the last 2 years has depleted because for more than 50 to 75 rupees. If you have 100,000 rupees, virtually equal to 25,000 rupees because of the rupee depreciation, because of inflation and demand and supply mismatches. So it has dropped. At this moment of time, what we are doing is the income tax is being doubled from 18 to 36%. If you see, if a person gets 300,000 rupees, if you ignore the qualifying payment relief, Atula gave an analysis of the qualifying payment relief. If you have 3,000 rupees, if you have 300,000 rupees a month, earlier you would have paid, currently you'll pay about 3,500 rupees, but after the changes, it'll be about 37,500 rupees. That's about 11 times it's going up. But if you take the tax-free allowances, the investment relief also, if you see, some of the people at the lower strata of income their taxes are going out about 21%. 21%, 10%, 11% is going up in that proportion. So naturally, it is becoming unbearable because of the taxes are going up at a time where our purchasing power has reduced. Not only this, our VAT rates have been already increased. But when the threshold comes in, when the threshold is dropped from 80 to 75 million, more and more businesses are going to be liable for VAT. So there will be more and more taxes imposed because on the consumption taxes import, which will affect the people. So when it becomes unbearable, what happens is it loses the legitimacy. For the reasons I said, the taxes loses the legitimacy. Now the question, that's what we are seeing for these reasons, what I have said. At that stage, it won't help the government, but it will destroy the government. Earlier, the government collapsed. One of the main reasons was, precipitous reduction of taxes instantly. Now we are increasing the taxes instantly, almost double. And also at the same time, the purchasing power of the rupee has substantially eroded. So now on that basis, there will be challenges for the people and also for the state, definitely challenges. But having said this one, is there other things where people will be satisfied to be satisfied or convincing for them to increase for the increase in rates? No. If you see the expenditure side, even in the budget, the total expenditure is going to 5.8 trillion rupees. And the expenditure is going up. The absolute number of expenditure goes up is more than the absolute number in the revenue. And the revenue is being projected at 69%. They are trying to increase, which is going to be tough. But then there is some redeeming feature that has come for us because there can be hope for us. Because if you are not going to manage expenditure, and if they are not going to manage the corruption vulnerabilities, the recent court decisions, in the first one is this: when the Association of Apartment Contractors went to courts, they didn't get relief. The relief what they wanted, they didn't get, and it was expected so. But in the concluding paragraph, this has been said by the three justices: Jayanta Jayasuriya, Chief Justice Thurai Raja, and Justice Arjuna Obesekara. This is the concluding paragraph. This is giving us hope, and there hope possible redemption of the country, because there is someone going to be there looking at the state, the parliament, the executive. This is what they say. Before we conclude, I quote, before I conclude, we must state that with wide latitude given to the legislator to impose taxes on the recommendation of the executives. That is, legislature is imposing taxes on the recommendation of the executive. Executive here, by and large, is the president and the cabinet president. With it a whole host of responsibility and duties both for the legislator and the executives are brought. The legislator entrusted with the responsibility to being in full control of the public finance must demand from the executive rationalize to its satisfaction the necessity for particular tax and the amount in which the money is raised by such tax would be expended. So what she's saying is that when the executive asks for more tax, the legislator should satisfy itself whether that request to increase is justified. The executive, on the other hand, must entirely act with great responsibility, manage all resources frugally without any wastage, and ensure that the monies are generated by taxation are used to direct economic activity in such a manner that will benefit all citizens. In this context, this last sentence is very important. In this context, a greater responsibility lies on the executive and administrative institution to act in accordance with their mandate in their performance of the duties. The court shall continue to exercise constitutional role as sentinel on QVB over expenditure and administrative action. If I can fit in the word for the Latin term that has put, the last sentence will read as, the court shall continue to exercise its constitutional role as the watchful guardian of the executive and administrative action, which is certainly a redeeming feature for people to understand. Similarly, in the Inland Revenue Bill, again, nothing much happened for the relief, but last finally the paragraph, last paragraph where Justice Aluvirano, Justice Fernando, and Justice Janaka de Silva, this goes reading like this. Nevertheless, we are mindful that the court is the last bulwark to protect rule of law and prevent any breach of public trust. Corruption and wastage of public finance must be addressed and violators dealt according to the law, irrespective of their standing. In order to do so, the court must be properly invoked by appropriate proceeding. What they are saying is anyone who is violating, subject to malpractice or corruption, public finance, wastage, what they are saying is the court should be maybe the Attorney General Department has bring to the notice of the court and it has to be taken action. So it is so I think the judiciary as an independent body is exercising its role because this is impacting the people at large. Thank you. I think I may have exceeded the 5 minutes.
Yeah, I think Suresh, you can give your comments.
Yeah, let me begin by thanking Professor Vatavela for inviting me to participate in this webinar. I think we had the opportunity of listening to 2 presentations by Mr. Atul Ranavira and Suleiman Ista. So I think most of the technical things were captured in that one. But let me again refresh our minds. Exactly what is this bill that we are talking of? This is supposed to be the interim budget proposals. Well, there was interim budget, and then there was a bill that was presented, not necessarily the content of the interim budget proposals. So what we see is basically that. So what happened was the bill was published along with the VAT bill. Both were challenged in the Supreme Court. So I think the delay in relation to passing in the Parliament is linked to that. And so what exactly did we, Mr. Gajendran also referred to this issue of going to courts, and we see what has been achieved. So 2 things. One is there has been a deferment with regard to the effective date. Earlier, basically, effective date even in the VAT bill was the 1st of October, and now it's commencing from 1st of January. In relation to the income tax, okay, we have corporate tax provisions as well as individual tax provisions. The individual tax provisions, individual tax reforms are starting from 1st of Jan, whereas the corporate tax provisions are, most of them are basically commencing from 1st of October. Now, why did the court only look at the individual provisions to be commenced from 1st of Jan, whereas why did the court ignore the provisions pertaining to corporates? Well, I can understand why, but then I think I always keep saying that first rule of nature is the self-preservation. So probably everybody in the courtroom, when they said tax, they thought, okay, these are income tax affecting the individual. So I think that is the reason why only the individual income tax provisions were shifted to 1st of Jan to ensure that there's no retrospective operation with regard to the proposals. But then, okay, corporates were forgotten, right? Right now, with regard to the corporate aspect, again, when Mr. Suleiman was covering, he mentioned with regard to the capital gains tax. Now, 30%, 10% capital gains tax going up to 30% in relation to corporates, commencing from 1st of October. So now, think of a transaction that has taken place on, say, 2nd of October. So what's the provision there? Now, the rule is from the end of the month, that means end of October, 30 days they are on. So that means by 30th November, the capital gains tax with regard to the transaction should have been settled, and the capital gains tax return should have also been filed. So now, at that time, what was the law that was in operation? 10% was the capital gains tax rate on both individuals and the corporates. So this particular corporate that had this carried out this transaction, disposal of the investment asset on the 2nd of October, would have filed the return on 30th November at what rate? At 10%. But now the law has changed. With retrospective effect, it's 30%. So there's a 20% shortfall. Now, what will happen to that? So I raised this question from the Inland Department. So what they're saying is, okay, effective date is 1st of Jan. So we'll give another 30 days. That means by 30th Jan, pay the balance 20% and amend the capital gains tax return is the response that I received. So I just want to keep you all informed. So that seems to be the position of the Inland Revenue Department. Then again, Anista pointed out with regard to this issue, the anomaly with regard to the dividends. Yeah, we hope that again a press notice at least will be published saying that maybe April or whatever, when they're passing the next IRA amendment bill, it will be effective with retrospective effect, but create certainty with regard to how the corporate should go about in their declaring dividends. So I think there's a big ask from the Inland Revenue Department to address this issue as quickly as possible, because there's a lot of confusion at the marketplace. Right. Then we have something, okay, with regard to the individuals, let me see. Self-employed individuals, I think the situation with regard to the individuals working in the mercantile sector is straightforward. But with regard to self-employed individuals, now the threshold is coming down from 3 million. So now when do you have to do your registration when you become liable? So you have to make the payment for January, February, March, the quarter, by 15th May. So 15th May, by 15th May, you need to get the registration in order to make the payment. Not only make the payment, again, the IR Inland Department is indicating that they are expecting the set form, statement of estimated taxes form, also to be filed by the 15th May when you are making the payment. So that's another point that you have to keep in mind. Right. Okay. Again, with regard to VAT, there's been many questions because what we have seen in the media is act is effective from the 14th of December, whereas both said, okay, it's 1st of January. What is the situation here? So it's a very simple explanation. Legally, act is effective from 14th of December. From 14th of December, you count 15 days. You get 15 days to register. So by 28th of December, those who are becoming liable for VAT now, because due to the reduction of the threshold, must register. So keep in mind the deadline is 28th December. And in relation to the residential condominium exemption elimination, that will take place from the 1st of Jan. But with regard to calculation of the threshold, that means the liability threshold 80 million, that commences from 1st of October. So that is the explanation for this confusion with regard to the 14th of December. I don't know that I have taken my 5 minutes. I think, yeah, so I will take the questions later on.
Yes, we'll move to Mr. Sivanesan. Your initial thoughts, Mr.
Thank you very much for inviting CMA Institute to be a panelist. I just want to first of all stick to the topic what we have to have today is the impact of individuals, professionals, corporates, and the society. So as far as the individuals are concerned, I think, as you know, all the consumption taxes have gone up 8% to 15%, the VAT and the introduction of SSCL. So I think the prices have gone up almost 10% slightly. So it does have a negative impact on the purchasing power of the individuals. So apart from that, if you have look at the reducing the tax-free allowance and withdrawing the expenditure relief and increasing the tax rate up to a maximum of 36%. I think obviously the individuals' disposable income, especially employees, disposable income has come down drastically. Second, my analysis, if I just estimated, if anybody earning annual income of 10 million rupees, under previous provisions, he has to pay only annual tax of 720,000. By work out today's rate, 2,538,000. So that means almost 350% increase. So they are obviously, in that case, the professionals are the main reason for leaving is definitely. So when you're having a 350% increase of tax, I think that will have a negative impact. So that will emerge in the social problem also, obviously. And the corporate tax rate is concerned, of course, so 24% to 30% is a marginal increase, but those having exports and the tourism sector, the 14% to 38%, that's huge increase of tax cost. Also, you must also mindful the dividend tax rate has gone up by 14% to 15%. So if you are going to impose a tax on dividend, so obviously it's a double taxation. Of course, we had some time before the impedance system, that is a tax credit system. To a certain extent, the double tax has been mitigated. But now we are going to pay 30% corporate tax. Profit after tax, when you redistribute to their own shareholder, you have to pay again 15% tax. The effective rate of the corporate is not 30%, slightly more than, I think, 40% in that case. And as you mentioned earlier also, I think this now the bigger crisis in our country now is a foreign exchange earnings. So there's no proper amendment to the law even to encourage the export earnings or even the tourism development. So that's the whole problem. So then obviously the exporter might think something else. If they're going to pay 30% tax rates, so there can be a risk of shifting the business to some other country. And other one, of course, we talked about the portion, the profit in between the 9 months and 3 months is a really complications. But anyway, that is optional. So the business income, that's optional. But the investment income, I believe you have to go with the actual basis. And introducing withholding tax only on the, especially on the investment returns, I believe so that can be done. That's no problem. But there are certain undertakings, they have huge tax losses brought forward. So there should be introduction of the direction system. So unless a proper direction system has been introduced, what will happen is when you're going to contribute the withholding tax, that become a refund. So when you have a refund, the department unnecessarily carrying out the audits, asking for details, no? Therefore, the withholding tax system will be more effective if you parallelly must introduce a proper direction system also. And next one is a capital gain tax on the corporates. I think Suresh pointed out that the legality, one side is the legality of the introduction of the capital gain tax increase from 1st October. Because the obligation has been, deadline for obligation has been already elapsed. Suppose if anybody disposed the property somewhere in October. But apart from that, I think the section 19 of the Act presently allows to set off the business loss against the capital gain. But going forward, so the business losses cannot be, or the capital gain can be set off against any losses. But that introduction was with the retrospective effect, 1st April 2018. So therefore, if you already filed the return, setting off the business loss against the capital gain, the question comes what you are going to do it for the past periods. And also the increase in the capital gain rate from 10% to 30%, I think it's basically against the basic principle in tax. Because you know that the capital gain is not a profit, it's a gain. It's a capital appreciation. It's a capital appreciation for the long-term period. So there are capital appreciation of gain for long-term. If you're going to apply the today's tax rate 30%, there's no logic on that. But having introduced the capital gain on 30% tax rate, now other side you are restricting to set off the business losses against the capital gain. So those are, I think, really complicated and really not compatible. And one more point I want to emphasize on the thin capitalization also, and not discuss on this. If you apply the thin capitalization rule, I think there are two bases of formula now. The previous basis, under section 18, the upper ceiling was given for a maximum loan for which you can claim the interest. But presently, the formula deals with the maximum allowable interest. So therefore, if you look at analyzed reason, if you look at the properly analyzed, the borrowing cost has gone up even double with the same level of borrowing. So in that situation, when you apply the present formula, I think a lot of the problematic situation can come up because even with the same borrowing, you have restricted on the borrowing cost allowable. And also the employees, there's a provision given in the law, the employees are not required to file the income tax returns if your income exclusively from the employment income, which is subject to APIT. But if you have other income, you must pay tax. So, but normally, generally, even the employee, any employee, there may be some amount of interest income. Even if you have a marginal interest income, I think we have to end up with filing the return. So the only solution, I believe, either you must make sure that at least to a certain limit, you must give them a final taxation rule so that you are not supposed to file. Otherwise, even a small marginal interest income, you may have to file the return. And finally, the amendment to the self-assessment return, I think you have made it from next year onwards within 12 months. So then question comes sometime if you want to make amendment for a refund claim. Of course, the refund claim can be won within 4 years of the end of the tax period. But other side, you are restricted the amendment have to be done within 12 months. So in that case, it looks like you can't claim the refunds by amending the self-assessment return after 12 months, no? So that may not be not in line with the refund claim provisions, the 11 Act. So that's all my specific comments and the overall comments. Thanks. Okay.
Thank you, Mr. Sivanesan. Dr. Kulatunga Rajapaksa, over to you.
Good evening, everybody. Well, most of the tax matters have been discussed by Mr. Suresh Per and others, so I don't want to go into detail, but I will just highlight the impact on it. Now, as far as the tax proposal is concerned, I don't see any incentive to promote exports. All exports, whether it is export or domestic or what, everything is taxed at the across the board rate of 30%. So what happens is, export area is very sensitive area where the export proceeds, the valuation and all that, it depends on what price they are going to export. So what will happen is, you are encouraging them to lower the export proceeds because of the high tax rate, 30%. So that means right now, there's a serious shortage of foreign exchange. So I think we should encourage the exporter to bring in foreign exchange. Now, in this case, there's always a tendency for them not to bring in foreign exchange or park the excess profit somewhere else. That has not been addressed. So I think that's a very serious matter. But right now, we need foreign exchange. I would prefer that what today they would have done is, they would have made it zero tax so that more foreign exchange will come in here. Now, that is not happening. Now, there's a tendency
whatever the foreign exchange brought in, they will bring in some amount, but there is a possibility that they will not bring in the entire amount. That is one defect, because foreign exchange, there's no in the budget or even in the Inland Act, there's no promotion or no incentive whatsoever for the exporters to bring in foreign exchange. That is a very serious matter. Then as far as the manufacturers are concerned, are being taxed at 30% now, from 80% to 30%. Now we must understand that manufacturers do need investments to bring their products up to international to the standards. So therefore, investments are required. You have to replace the machinery, you have to erect buildings, all that. There's no additional accelerated depreciation or lump sum depreciation allowed for investments. And also, apart from that, to do the investment, you must do the borrowing. The bank borrowings, interest have gone up to 33%. So I don't think any industry will make any investment during these years, because on one side you have to pay 30% income tax, another side you have to pay 33% or even more than that, the bank interest. So therefore, there's a serious cash flow issue for all the industries. Therefore, all the investments in any industry will be postponed until such time the bank interest will come down. And also, there is no incentive for the investments. Earlier, they have the accelerated depreciation, lump sum depreciation, all those have been withdrawn. Then other point is, right now also, we have a serious brain drain. Now the income tax, the personal income tax rate has brought down to 100,000, and above that we have to pay income tax. And the slab scale have been brought down. So we must understand those professionals, they do have their children educated in international schools or abroad. Then they have already started building houses. And the house loans were given based on the area estimates. That revision is also a very difficult situation. So nobody will be able to complete their houses. Neither they will be able to educate their children abroad, because even due to the recent increase in parity rates, the amount of money that is going out from the rupee value has gone up for the foreign education or even the local education. Therefore, with the increase of income tax, they will have a very marginal amount remaining for the disposable income has been drastically reduced. So they will definitely have to find alternate ways and means of balancing it. So naturally, as anything happens, there can be a tax evasion or profit. They will not show the profit that should be shown. Then the next item is now the tax returns. It's a very complicated situation. We had to file 2 tax returns for first 9 months and another 3 months. So that means all the tax return is a complicated procedure. All this time there was a hue and cry that we should simplify the tax system. But simplification has gone beyond that. Now it has made complicated. So therefore, unless you get a accountant or somebody to prepare your own tax return, it's extremely complicated process now. Then, since they has given a new tax rate effective for personal tax from 1st of January 2023, the tendency would be for the professionals and the private sector to pay bonuses in December so that they will qualify for a lower tax rates. That will happen. Then, most of the private companies are engaging a lot of service sectors, transport, meal providers, and various other service providers. Now, new WHT will apply to all services providers whose bill is more than 100,000 rupees. So therefore, naturally, all those who are providing transport, all those who are providing meal services and other services, definitely will have a bill over 100,000 rupees because with the new inflation rates. So they have to pay 5% withholding tax, and that is not the final tax, and that cannot be claimed at all. Earlier, when they introduced withholding tax, those who are paying income tax, they were allowed to claim it. Now this has been withdrawn. So that means that even sometimes the profit margin may be more those transport providers, the 5% is a huge amount. So this will definitely be increased, and there's a problem on that. Then SME sector, there is no benefit or promotion at all or incentive for the SME sector. They are also being taxed at the same rate as large corporates at 30%. So that means SME sector will definitely not be able to sustain, because they will not be able to take a bank loan at the rate at the lower rates. neither will be have to pay income tax also the 30%. So therefore, the SME sector will face serious situations with the inflation. With the inflation, their threshold of VAT also will be qualified now because it has come down to 80 million. So therefore, they also will qualify the VAT as well. The VAT registration also will count. Then another point is the listed companies. Now, listed companies were listed on the understanding that government gave undertaking that they will be taxed at 14%. If they list before a certain date, they are given the date also. Now, suddenly this has been changed. Now, this type of changes that will take place will lose the trust with the government now. In future, whenever government announce some sort of tax holiday or tax benefit, people will not accept it because the next government can change it. This is a very, very bad situation, especially tax must be, once you announce that you have given a tax holiday of 3 days, you must stick to it. Halfway, if you start changing it, this will lose the confidence of the investors as well. Now, these are everybody who went public for a simple reason of getting the tax relief. Now that have been withdrawn from 40% to 30%. So that means they were given undertaking, they were given a promise saying that you have been taxed at 40% for 3 years. So that have been changed. So this is a very bad situation. And also the tax return have been made highly complicated now. Ordinary person can't prepare a tax return. Then other thing is, the tax have been collected to meet expenditure. There are two types of tax revenue that we collect. One is for the foreign exchange shortage, other one is the domestic rupee requirement. For foreign exchange requirement, I don't see any incentive, any place where how to increase the foreign exchange earnings. If at all, there's a reduction as well because of the tax. The people will not tend to bring in the foreign exchange here. Then other thing is brain drain. Brain drain will definitely take place because those professionals will not be able to build up a house or educate their children with the present income that they are getting. So therefore, it's natural that the brain drain will be accelerated and they will go abroad. And once they go abroad, whatever the money that they earn, that is tax-free. So therefore, the tendency would be there. Then with all that, the people will, with all that, still people will be prepared to pay taxes, provided they can see how their tax money is being utilized. Now, there is no provision anywhere to reduce the government expenditure. There's nothing that been shown. There's no transparency. There's no mention either in the budget or in any another place that the government is going to reduce the expenditure. That is not happening. So therefore, the people are now reluctant to pay taxes because they feel that this money is wasted. So therefore, it is important that government has built the confidence of the taxpayers, saying that your money be utilized for these purposes. And we have taken action to reduce the government expenditure by taking these actions. Since that is not available, that is one of the main reasons why not only professionals, even others are also agitating about money being used for wastage, for other purposes, which is not productive. So therefore, and also wastage and corruption. There's nothing done on that still. We don't see anything constructively that this has been taken place. So I think because of that, the confidence of the taxpayers have been lost. So this has to be brought in again, saying that your tax money be made use of these purposes. So that is not happening. Therefore, I think these are the few things that we got to mention, and I will come in the Q&A stage. Thank you.
Thank you, Doctor. Dr. Mahesh Ramaswamy, over to you. It's your initial thoughts.
Yeah, thank you. And I think a lot has been said, so I can keep it pretty brief because I don't need to repeat all what has been said. All what has been said has a lot of valid points by the previous speakers. Basically, we also need to understand that the costs have increased, particularly from a business point of view. When we operate, our operating costs have gone up. The rates have gone up, the electricity, fuel, and whatnot. So there is huge operating cost increase for a business at the moment. So now, on top of it, with this situation of tax regimes changing, there is also this huge direct impact on the employees, because they will get wider tax and their tax impact will be heavy. So it will become another problem for the organizations on how do we retain talent, because for us to be productive, for us to be doing what we are doing well and continuing to, particularly in the export sector, when we want to retain talent to make our productivity and be globally competitive, two things important. Our operating cost has to be competitive, and then we need to retain good talent. Now, both are going to be under severe stress. So this is one big area, apart from everything else that has been mentioned. What will be the way we are going to retain talent to make sure we continue our operations, and then how do we invest in our growth plans? You know, so it's extremely important that we don't stall our growth, but in this situation, we have to rethink how we're going to design these things going forward. So these are my simple additions to what has already been said. Thank you.
Thank you, Dr. Mahesha. Mahendra, Mr. Mahendra Jayasekara, your initial thoughts, please. You're on mute, Mahendra.
Yeah, good evening to all of you. Thank you, Nisa, for this opportunity. In fact, as Mahesh said, a lot has been said. So I also don't want to repeat what the previous speakers have said. But my initial thoughts are, now what we need to understand is that when the budget is the most important. I will speak from overall point of view as I see it from the industry. Now, actually, in my opinion, budget is the most important policy tool the government has in managing the economy. Now, this policy tool has to be used if you take it in the current context of economic deterioration and degrowth we are experiencing, to one, increase revenue of the government while giving direction for economic expansion. If we do not give direction for economic expansion through increase or reduction of subsidies or investments, as the case may be, or through resource allocation, right, reallocation of resources, trying to increase the government revenue alone will not take this country anywhere, will not take this economy anywhere. In my opinion, there is absolutely no vision for the economy in this budget. Now, why I am saying that is the government's entire focus is on revenue generation. And that revenue generation, the government is going to achieve in a contracting economy. And in trying to achieve that expansion of revenue, the government should be mindful of the measures they take or it takes, that the measures should lead to some kind of expansion or at least spur growth of economy. But here, there is absolutely nothing for expansion of the economy or to spur growth, economic growth. Now, that is a very, very damaging feature we see in this budget, because the government has completely ignored the economic aspect of it and concentrated only on the revenue generation. Now, with regard to this, I don't want to talk about tax rates per se, but if you look at this question of taxing exporters, actually, I personally have no problem in taxing exporters, because exporters will pay tax only if they make money. But we have to look at the external environment and at least the regional business environment in setting, in coming up with taxation policies, let alone the global business environment. Now, say, for example, the government is proposing to tax export earnings at 30%. Now, you go to Singapore, you set up a office in Singapore and export through Singapore. On the profits you generate in Singapore, you pay 17% tax. So why should the exporters bring all the money here unless the government can offer something to the exporters that the Singapore cannot offer? So there is no incentive. Actually, the government has completely incentivized the exporters to do business using Sri Lanka as the base. Now, that is also a very, very damaging and discouraging feature we see in this budget, that the government has demonstrated that it has no idea whatsoever of the regional business environment. And whom are we competing with as exporters. Because as Dr. Rajapaksa and others said, the country is starving of foreign exchange. We are crying for foreign exchange. So we should incentivize all companies to try and export. All people should be geared to export. All companies should be geared to export products and services, and they should be encouraged to bring as much money as possible to the country. And there is absolutely no incentive for that. And also from policy framework, now, say for example, resource allocation is a very important aspect the government should consider in coming up with a budget. Because if the company is running well, there is no need to, one might argue that there is no need to make adjustments in the company if the company is running well. But if the company is not running well, then there is a need to relook at, you know, what departments you should run, what departments you should downside, what products you should produce, what products you should discontinue. All these restructuring plans will come into play only if the company is not doing well. Similarly, when the economy is not doing well, the government should look at what are the businesses we should be in, what are the sectors we should look at, what are the sectors we should expand, what are the sectors we should discourage. There is absolutely no mention about any of these things. Now, say for example, in 2018 August, the United States government imposed anti-dumping duties on 2,000 products exported by China to USA. We haven't identified, as a country, we haven't identified, made an attempt to identify at least 10 items that we can ship from China to Sri Lanka for manufacturing. There would have been, okay, I personally know one item because we started that, but there would have been maybe 5-6 items. Individually, the companies would have identified and started manufacturing to export to USA. But as a country, as a government, we have not made any attempt to identify, let's say, 20 items of that 2,000 items to ship from China to Sri Lanka for manufacturing purposes and exporting. Now, Nista, what happens is, see, for example, Dr. Rajapaksa also spoke about efficiency of expenditure. Now, say, for example, you know, in that respect, we spend so much money maintaining these foreign missions, right? Now, have we asked these foreign missions, say at least a mission in China, to identify at least 20 items, speak to those Chinese companies that are struggling in China and try and get them to come to Sri Lanka and manufacture here and export? There is absolutely no effort made to basically resurrect the economy, to redirect the economy, and, you know, revitalize this ailing Sri Lankan economy. So that is the sad part. So I think I have spoken enough, but just one more thing, actually, on the score of SMEs and the tax rate. Just one other thing is, now the government is saying that they are going to tax all companies at 30% rate. But how about the companies that have signed the agreements with BOI? There are companies that pay 0 tax, 5% tax, 10% tax, 15% tax, 20% tax. So where is the fair treatment? So how do companies that pay 30% tax doing the same business, right, compete with another company doing the same business, but they have just signed an agreement with the BOI, and as a result of that, they enjoy the concession? So, I mean, I don't see any vision as far as the economy is concerned. We see a big vision as far as revenue generation is concerned. And lastly, but not least, the government also has not done one very important thing. That is, they have not done anything to earn the trust of the people as far as this budgetary exercise is concerned. So if the government does not do anything to earn the trust and confidence of the people in the process of budgetary planning and execution, implementation, the budget will fail. Thank you.
Thank you for that, Mahendra. So I think most of the questions have been already answered in the chat box. Most of them were sort of tax related. Q&A, and we've, I think, come to the end of our time. Professor, shall we close with this? I think you have to give a closing remark as well, right?
If you have any special comments you can make, and then we can.
I think most of it was made. Even the questions that I had, most
If you
were
have any
answered by
special. Yeah.
so with that, we can conclude, Professor. Only thing is, I think all of the
Q&A, is there
comments.
anything? Q&A, is there anything? I don't know if there is.
Q&A, it was all answered by Atula on the chat itself.
All right. Okay.
Nista, there's one or two questions which I have left. I thought that it is better.
Yes, you can just read it out, Atula. Which one?
Yeah, there's one question. Long-term personal foreign currency fixed deposit convert to Sri Lanka rupees. Are there any capital gain tax on that? Convert to Sri Lanka rupees, whether there's a capital gain tax. Shall we ask
Sivanesan, you like to take that or Suresh?
There is a point here. When question comes to the long-term investments, whether it's an investment asset. If you go to the definition of the investment asset, even a financial asset also is investment asset. Now, if any financial asset you kept it for if you held any financial asset for investment purposes, so that can be termed as an investment asset. So that point, if you categorize on that basis, on a realization, so that is subject to, of course, earlier it was 10%, but now when it comes to corporates, that's going to be 30%.
Any other view, Suresh? You're on mute, Suresh.
Yeah, sorry. So yeah, correct. So that's then you have to put the normal formula, consideration minus the cost, and you have to look at the what is the cost. Is that the if it is an investment asset, then the 30th September 2017 value should be taken, and then the consideration the dates realizes what's the rupee value there, and the difference between the two and the appropriate rate. That will be the formula.
Nista,
Thank
there's
you.
another question. I think it is better for us to discuss that also in this chat box. It's think
I can't
capitalization.
see the one. Yeah, tell me. Yeah.
I'll read it. Think capitalization rule will going to have the major impact on SME and exports. How we can eliminate this impact, because as exporters we have to pay 30% income tax and interest cost of also at 30%. Is some tax planning what he is asking, how to plan the thing capitalization, how to pay the thing capitalization.
Yeah, I think the policy is what will probably have to be changed because they want to have sufficient capitalization, and the capitalization requested also it doesn't seem unfair. It's like four times, right? So if you have capital of 100, they are allowing you to borrow 400 or 300. So it's not absurd in terms of, I mean, you're 3 to 4 times of your capital you can borrow, and anything beyond that is what they are restricting. So given the current situation where a lot of people have depleted, they have made losses, especially the hotel trade, I would imagine that they would have accumulated a lot of debt and losses. So that will just compound the situation. So I think in that they just give 1 year concession, but then the policy must change at least for SMEs or something like that to encourage in these difficult times to allow it, and then reduce that. Any other views are welcome by anyone else.
Yeah, I think it's basically the policy change that we should look at this entire formula with regard to the thin capitalization, how it is applicable, what loans are covered. All that basically is well and good basically when it's in the IMF-based countries, but Sri Lankan economy and specifically now the current situation, I think that's a formula is not appropriate, but it's something that the policymakers have to relook at.
So with that, Professor, I think we are out of time.
Right.
I'll hand it over to you.
Okay. Thanks a lot, Nista. I think you've done an excellent job. So let me thank all our speakers and also our panelists for their excellent presentations and comments that they have made. So as was stated, maybe we have to see how the implementation side will come, whether the government will be able to really collect the money that they need. So that's something that a big question mark. But as was stated, the expenditure is of great importance. You see, you increase your income at the same time you don't increase your expenditure. Not in maybe the corporate sector, but government sector, it seems to be a little different. So that's something that we need to see, and also whether some sort of relief could be obtained. So once again, let me thank everyone, also our Mr. Gajendra Puendran for the initial introductions he has given, and all our commentators, the speakers, Atul Ranavira, then Sulaiman Nista, and then of course our panelists and commentators, Mr. Gajendran, N.R. Gajendran, Suresh Perra, Sivanesan, then we have Dr. Rajapaksa, Dr. Mahesarana Soma, and Mr. Mahendra Jayasekara. So, and also for all our participants, there was quite a good attendance. I think almost 380 to 390. And of course, when the comments start, it gets less, but I'm sure that it would have been very useful to everyone. So let me thank everyone, and I do hope that the new tax amendments would be enable people to plan their taxes very well, so that it will not be a major problem for them, so that they can plan it. But today things are very, very uncertain because of the prices going up. These are maybe normal things that are seen in a economy that is in crisis. And when we will be able to see some good good things happening, we have to see. But I think the biggest impact is coming on people leaving, the talented people, the skilled people leaving the country, which will be a big loss for the country. But it may not be only on the taxation, but it is also on the economic situation of the country. So there are a lot of factors that one has to take into account. So here we have to take it as a whole on what is going to happen. So while thanking everyone, I do hope that we will be able to keep in touch and then continue our webinars and discussions, and then see whether how things are going to progress, and how we can really give solutions to the people. So thank you, and with those closing remarks, we will end the webinar. And once again, thanks to everyone, all the panelists, the speakers, and of course the participants. Thank you, and wish you all the best. I'm sure Christmas is coming, New Year is coming, so I think we need to get ready. Maybe bonuses have been paid. I hope not at the higher taxes. So things should be all right for everyone. But maybe in the new year, let's see how we are going to face challenges. Thank you, and we'll close up now. All the best.
Thank you.
Thank you.